The E-mini reversed up extremely strongly yesterday. That reduces the chances of a bear trend day today. Because yesterday was an outside day, it also reduces the chances of a big bull trend day today. We might get above yesterday's high. We have room up to a measured move target on the 60-minute chart. But because yesterday was an outside down day, if we get above yesterday's high and reverse, that would be an expanding triangle. When you have an outside down day, there's usually some high the day before for a first push, second push, and then if you go above the outside down day, you get a third push up for an expanding triangle. Today will probably either be an inside day. Yesterday was a very big day, and we're opening somewhere in the middle third, maybe the bottom of the upper third. Today will probably either stay inside yesterday's range, or it'll get above yesterday's high, and if it does, it probably will not get far above yesterday's high. Similar to over here. We have a big day, might have been an outside down day, and next day get above the high, but not much above the high. Another upside down day, next day got a little bit above the high, but not much above. Outside down day, next day pretty much an inside day. Outside down day, next day an inside day. With that big reversal, anytime you see a reversal, you got to be thinking trading range, because a reversal up means we went down big and up big, and that increases the chances of a trading range today. We're within striking distance of testing yesterday's close. We could easily test the 60-minute moving average. The bulls obviously want this breakout above this lower high to have follow through. So they want this sell-off to be a test down to support this high, that high, moving average, yesterday's close. And then they want an opening reversal up from the support. And the bears want an early high of the day. They want the day to sell off on the open. But coming in, we know there's an increased chance of a trading range day. Big down, big up, big confusion. Even if we get above yesterday's high, we're probably not going much above yesterday's high. So the high of the day will probably be right around where we are now, or a little bit above yesterday's high. Low of the day could be all the way down near yesterday's low. Right now, I think we will not get below yesterday's low. This reversal up was so strong that I think it reduces the chances that today will be much of a bear day, if it is a bear day. First bar yesterday, doji bar, gap up doji bar, and we went sideways for 5 bars. And this bar has the look of a doji. We went up, we went down, we're going up again. And we know coming in, today has an increased chance of being a trading range day. So you'd expect trading range bars, like doji bars, and you'd expect some early sign that the day is going to be a trading range day. So you'd expect early tight trading range, early reversals. If it closes on its low, certainly a swing short. Because the trading range day is likely, it should fall below support, the 76 high breakout point. When the market's in the trading range, it typically goes below support before reversing up, and it usually goes above resistance before reversing down. Everyone's waiting to see if it'll close on its low, in which case traders will be more willing to sell with a stop below, or if it'll close on its high, which is not likely. Even a one-tick bear body increases the chances that we're going to test down because it makes a weak buy signal bar. You can see that little bear close. Traders sold the close looking for a dip at least one tick below the 76 high and maybe down to the moving average and yesterday's close. The odds are that we're putting in an early high of the day because we're probably not going much above yesterday's high. If we rallied above yesterday's high, we probably would reverse. A bear trend day, not likely. It's possible, but more likely a trading range day. That trading range is also this trading range. So the market for the past 2 days has spent a lot of time in the 2840 area and might do that again today. Are we always in short? It's a big enough bar so that we're probably always in short, but we're into that range around 2840 where we went sideways for the past few days, and we're at support, yesterday's close and the moving average. And today is unlikely to be a big bear trend day. If we get above yesterday's high, we probably will not get much above it. If we get below yesterday's low, we'll probably not get much below it. Bulls want an opening reversal up from support, moving average, close of yesterday. Remember, no matter how strong a breakout up or down is on the open, 50% chance it's going to fail in reverse. The bulls want an early low of the day and a reversal up to above yesterday's high. And the bears are hoping that they get a series of bear bars, but so far that does not look like the case. The buy the close bulls who bought the two close have already made money. So a confusing picture usually results in a trading range. I did not sell this because I was typing, but if I was not typing, I would have sold this at the market for a scalp. I said on the open, the bulls will try to get an opening reversal up from yesterday's close in the moving average. And that's what they're trying to do here with bar 3. We have a higher low above the 80 low. And if the bar closes on its high, it's a possible low of the day and a reasonable swing buy looking for a test up to yesterday's high. As I said, if we get above yesterday's high, we probably will not get much above yesterday's high because yesterday was a big outside down day and you usually do not break strongly out of yesterday's range when you have a big outside day, especially a day that closes in the middle, which means it's a big doji in a one-bar trading range. Bears trying to stop this from being a good buy signal bar. It's still a reasonable buy above 3 for a possible low of the day, but with that big tail on top, I think it's probably not a strong buy above 3. And for the bears, they have bar 2, but they scalped. Look, bar 3 rallied strongly. That means all of those bears who sold the market during 2 bought back their shorts. They bought back their shorts because they're not confident this is the start of a big bear trend. They thought, at a minimum, we would test support. And at that point, they were not sure if there would be enough bulls to create a low of the day. So the bears bought back their shorts. And the bulls wanted 3 to be a credible buy signal bar, but it ended up having a big tail on top. So confusing, right? We gapped up, we sold off, we reversed back up. I think we're probably always in short. In other words, I think we may go a little bit lower down to yesterday's close, but I think best choice right here is flat. The bears, they're hoping 2 is a bear trend, 3 is a pullback, and 4 is a low 1 bear flag. But we're right above support. We bounced up big on 3, and it makes a lot of bears unwilling to sell with a stop below 4. Also support just below moving average close of yesterday and the middle of the trading range around 2040. I think we're going a little lower. I'm not sure that we're going much lower. Sometimes you'll get an opening reversal and the bar has a big tail on top, but it still ends up being the low of the day. And therefore, a lot of bulls will still buy above that bar with a big tail on top. The problem here is not only does 3 have a big tail on top, but the bar is very big. That means that in addition to the low probability from the big tail, the risk is big as well. And a lot of traders don't want to be risking whatever that is, about 5 points on the first trade of the day. Doji bar, a high one, a pullback from this breakout, but doji bar, big tail here, not a very good buy. Sometimes when you get a gap up, you get a very big sell-off, and it still reverses up from a higher low. This is the same kind of thing, very big sell-off after a strong rally. You got an early low of the day. Gap up, strong sell-off, but higher low. And we got the low of the day. The bulls tried to do that here, but this was just too many bear bars and too tight a channel. They were unable to get the reversal up. Rally, strong sell-off, but higher low. Gap up, sell-off, low of the day, double bottom, low of the day. Not a good stop order environment, but probably getting down to yesterday's close. Bears want to get below 80 because they need lower lows if this is going to be a bear trend. Bulls will try to get an opening reversal up here. On a smaller time frame chart, it would be a wedge, down on 1, up on 1, down on 2, up on 3, and down on 5. Bulls need a reversal, right? Would I buy the close? I would not. Possible gap, 3 low and 6 high. And important target, 80 low. If this is going to be a trading range day, you have to assume the market's going to go lower than what you think is likely, and the 80 low is a definite target. Once it gets below the 80 low, we no longer have higher lows, and therefore we no longer have a bull trend. We then either have a bear trend or a trading range. Limit order bulls buying 1 tick above the 80 low, but I think we're probably going down to the 60-minute moving average, the next support level. I think we'll go below 80. We're falling with a lot of momentum. Will limit order bulls make money buying the 80 low, buying below? They probably will. We're near support. We have a spike pullback channel, expanding triangle 1, 2, 3. Now we have an expanding triangle bottom. Anytime there's an expanding triangle top, you have a potential for an expanding triangle bottom once you get to the new low. But pretty good momentum for the bears and magnets below, 60 low and 60-minute moving average. At the next support level, 60-minute moving average, what happens if we get below yesterday's low? Probably not much. Right? Yesterday was a big doji bar, and that increases the chances that today will continue the trading range trading. So it's unlikely to be a huge bear trend day. Head and shoulders top, left shoulder, head, right shoulder, a wedge, lower high, major trend reversal. But more likely, we're going to go sideways because we were sideways here 2 days ago and then yesterday as well. Is it sell to close? I would not. The screen looks like a trading range. We're up and down, and we're at the 60-minute moving average. Always in short, but I'm scalping. I am flat right here. We're right at support. Reversed up at this price level yesterday here. There was resistance here. We broke strongly above it here, and now we're testing that area again. Important right here, right? We know the limit order bulls bought the 80 low and they bought more lower. Will they make money? If they do, that increases the chances that we're going to be mostly sideways today. If the bulls can make money in a strong sell-off, just like they made money buying the 2 close and they made money buying the 1 low and scaling in lower. Bears are trying hard to stop it from getting above that 80 low. They're still hoping that they'll be able to get a big bear trend day, even though they know the odds are against it. Since it's possible that it's a higher low major trend reversal, bear trend bull breakout, higher low, and it's an expanding triangle. 3 pushes down, 1, 2, 3, different ways to draw it. It's a possible low of the day, but I don't think the probability is high enough for a scalp, given that you have to risk about 5 points to make maybe 2 points. So if you're buying above 7, you're buying for a swing. With the channel down as tight as it is, a 7-bar bear micro channel, the odds are the first reversal will be minor and the bulls will need a double bottom, maybe 5 or 10 bars from now. Impressive, right? Micro double bottom, parabolic wedge, 1, 2. A higher low major trend reversal, expanding triangle, 60-minute moving average, all good for the bulls, but probably a minor reversal because it's a 7-bar bear micro channel, and therefore the first reversal up is probably not going to get all that far. For the bears, a low 1 short, like 4, but a strong enough reversal, good enough context, probably buyers below 8. We're probably entering a trading range here. Limit order bears selling 7 high, a bear micro channel. So they're scalping. 50% pullback traders. Whenever you get a big buy signal bar, a lot of times bulls don't buy above the high. They buy a 50% pullback, at least for a scalp. Similar to 28 yesterday, the bears want a low 1 short. Here, 22, they got the low 1. Here, 28, the bears had a good sell signal bar, but the bulls bought, trying to prevent the sell from triggering. Possible parabolic wedge bottom at support. Same kind of thing here. Will it be like 23 and lead to another leg down, or will it be like 28 and get a little bounce? It's a swing short below 8, but I think it's not a very good short. It's right at support. Decent sell signal bar, but bulls bought that low. I don't normally buy below big bear bars like that, but I did here. This is one of those special situations. Low risk. You buy the 8 low, stop below 6. And scalp out, and I've already scalped out. For the bulls, they want a good buy signal bar, 9 for a possible low of the day. Micro double bottom at the 60-minute moving average, higher low major trend reversal, bear trend, bull breakout, higher low. If it's not a very strong bull bar closing on its high, a lot of the bulls will not buy above 9. For the bears, they're still on they're short below 9, below 8, but they'll get out above 9 if 9 closes above its midpoint. I would not be short here. I'd be out of shorts. I'm going to quickly talk about a scalp here. Strong bull bar often has a deep pullback. Bulls buy 50% down, right? So you got some bulls buying right here, right? And they'll buy more here. So their average entry price is here, and they can get out and break even, or some of them will hold for the market to get back above their first entry price, and they'll get out with a scalp on their second and break even on their first. You can see it stalling right at that 50% mark, and in part because of what I said. You get scale-in bulls. They bought the 50% pullback here. They bought more below here, stop below here, and they're trying to sell right there. Important bar. If it closes on its high, especially if it gets all the way up here, it's a reasonable buy for a swing up. If it has a 3-tick tail, 4-tick tail, most traders will not buy above 9. The market's deciding, is it going to hold the support, or is it going to go down and test the next support level? This is common where you have reasonable context, but the signal bar is just not quite good enough. It's an okay swing, buy for a possible low of the day, but higher probability to wait to see if we start to reverse up strongly and then buy. The bears want a low too short at the moving average, a break below the 60-minute moving average, and then a test down to the next support. Are we always in long yet? I think the bulls need one more bar, but it looks like we're trying to put in an early low of the day, and it looks like we're probably going to stay or spend a lot of time in this 3-day trading range. For the bears, double top bear flag 8, but context good for the bulls. A test down after yesterday's strong reversal up. The bulls want this, but they're probably not going to get it. They're probably going to get this. So up and down, up and down. Some sellers 8 high, betting on a trading range. Next target, top of the sell climax, 5-6, the 5 high. Can we get a big bull trend day today? Not likely. We sold off 16 points, and if you get a big sell-off like that on the open, the odds are against the day becoming a big bull trend day, even if it reverses up. So if it reverses up, it'll have a hard time getting much above the high of the day. So a big early sell-off makes a big bull trend day unlikely. Like yesterday, we had big sell-off fairly early, unlikely to be a big bull trend day, but you can still get a reversal, and so you can still get a bull trend, but it's unlikely that you're going much above the high. We might get a bull trend, but unlikely we'll get much above the high. Limit order bears will sell that high, scale in higher. So far it's pulled back 4 ticks. It has to pull back 5 ticks for them to make their profit. And the bulls want a gap. They want to trap those bears, and they want the market to go up for a measured move based upon the micro double bottom. The limit order bears probably will make money because just like on the way down, the limit order bulls made money since the odds were a trading range day. The odds still are a trading range day, and therefore chances are limit order bears will make money on the way up, just like the bulls made money on the way down. We're stalling right at the 3 low. You had limit order bulls who bought the 3 low thinking it was a bad sell. They bought more here, and they need one more tick to make money. They probably will make money. So we're probably going above the 3 low, and we're probably falling at least one more tick below the 8 high. Okay, the limit order bears made their money. So the bears, double top bear flag, a low 2 bear flag, but the bars are much bigger than what you would expect if this is going to be a successful bear flag. So probably buyers below 11 and probably a trading range here. Fairly high up in the range to buy, but probably sideways here. Testing the 9 high, the buy signal bar high, not a good looking buy signal bar. So that's why it's getting tested. The bears want the low 2 short, but probably buyers a point or two below the 9 low, not a high probability short. Limit order bulls who bought the 9 high made their scalp. Limit order bulls who bought 9 low, which I would not do, will probably make a scalp as well, or at least they'll get out break even. Range is big, so I would not buy too high up. If I'm buying a point below or at support, 9 high. Bulls want failed low 2 and a measured move up to the high of the day. Instead of the wedge bear flag, which it is, I'm going to draw it more as an expanding triangle, which it also is. Different ways to draw it. You can draw that low or this low. Bulls want 13 to close on its high. Bull trend, bear channel, but bull flag, breakout and a pullback. So this is anytime you get a reversal up, here we get a bull flag, which is a bear trend, you get a reversal up and a pullback. Anytime you get a reversal and a pullback, it's a cup and handle pattern. This one's a tiny one, but it's still a cup and handle pattern, maybe on a smaller time frame chart, 1 minute chart. So reversal up, cup, and then pullback handle. Can you buy for a scalp above 13? No, I think you're only buying for a swing, and we're on a swing up from above 9. Bulls trying to get a breakout here to make it clearly always in long. Bears want the breakout to fail to create a wedge lower high, but I think I've been saying all along that I thought we'd, once we started to sell off, I thought we'd get an opening reversal up, and the day will end up as a trading range day. Why are we stopping right there? Limit order bulls are about the 4 low scaled in lower, and they're taking profits. Now that we're back above the 4 low. So you have some bull selling here. And then you have the bears hoping for the wedge, but too many big bull bars, so not a very convincing wedge. Suppose it closes on its low at or below the moving average. What about shorting that for a wedge lower high? That would be the only stop entry setup that I think is worth considering. But even then, I think we're probably in a trading range, and we're probably not going to sell off all that much. The bears need the bar to close here at or below the moving average. But even then, I'm not sure that the probability is high enough for a scalp. You'd be taking it for a swing. But with the market getting this double bottom, reversal up at the moving average, 60-minute moving average, I think it's not likely to be a swing. It's probably at best going to be a trading range. The bulls needed one more bar after 13 to make it clearly always in long, and they failed. So to me, it's confusing, and we'll probably go sideways. This is the middle of a developing range, so a bad location for doing anything. I don't want to be buying the 14 low, and I think the probability is not high enough for a scalp, so I would not sell it. And I don't think we're going to get a swing down. I think the probability is too low, so I don't want to sell for a swing either. Bulls trying to channel up. 1 bar pullback, reversal up. 1 bar pullback, reversal up. 1 bar pullback, and they hope to get a reversal up. But wedge, big bear bar closing on its low at the moving average. Not a lot of bulls will buy that 14 low. They want to buy lower, down near the 9 low. Whenever you have 2 support areas at the bottom of a trading range, the market often comes down and gets one, but not the other. And therefore, we might get a double bottom, higher low at the 9 low. I'm going to turn the screen off, and I'm hesitant to open the examples PowerPoint because we've been crashing so much. Go to webinar crashes, TradeStation crashes, PowerPoint crashes. I'll leave it open for a little bit to make my point. Reversal up, higher low, major trend reversal, not enough bars, double bottom, double bottom, higher low, major trend reversal, double bottom, higher low, double bottom, higher low, slightly lower low, but a double bottom, higher low. This is more like today. Double bottom, strong selling, so probably a minor reversal. The bulls needed a second double bottom before they got the rally. But this is the kind of thing that I'm talking about today, where we might get a deep pullback to that low, but not below that low. So a deep pullback to the 9 low, but not below the 6 low. And there'll be buyers there. If the sell-off is in a tight channel, it'll probably be a minor reversal, and the bulls would then need one more test down before they can get a rally. Double bottom here. But this is what I'm thinking we might get. I'm trying to get a double bottom, higher low. I'm going to close this out to reduce the chances of crashing. Pausing 12 low, limit order bulls buying there, but we're probably going lower. A double bottom 12, double bottom 9, but a big doji bar, so not a strong stop entry buy setup above 16. Limit order bulls 12 low, made money. Can you sell above 16? I don't know. I'm slightly more bullish than bearish. I think we're trying to form an early low of the day and get back up to the open. But I don't want to be buying with stops above big bars because trading range likely in general probability is lower if you're buying high. And if you buy above a big bar, your stop is probably below the big bar, which means your risk is big. That's a bad combination. Credible low of the day. So I think we're always in long, but I also think we may be sideways here for an hour or two and get down to the 9 low before the bulls can get a swing up. And I think the odds are against a big move up or down, that today will probably stay mostly a quiet day. If I see this or this, I'll change my mind. Limit order bears 16 high, just made their money. I think we have to get back down to the bottom of the range. I don't know which one of these reversals will get us there. The bulls know that the bears want to get down to the bottom. and the bulls would like instead to get a breakout and trap all the bears who are shorting at the top of the range. I think the odds favor a test down, but I also think we're always in long, and I think we've seen the low of the day. I don't know if we've seen the high of the day. Even though we're closer to the low than to the high, the context is good for the bulls. This is probably a pullback from this very strong rally yesterday. So these two bars, I think, are controlling the price action. On the chart, they are the two most important. They are the single most important thing going on. And they're up. So you have to assume that whatever's going on here is less important. This is, I think, dominating the price action. What do the bears need? Well, they need to reverse that, right? They need to get strong reversal down so traders will no longer think that this is the most important thing going on. Well, I think we've seen the low of the day. I still think we have to test down 16 low or 9 low. The bulls want the breakout, which can come at any time. The bears sold off strongly, reversed up strongly here. The bulls, the bears have a decent sell signal bar, but the bulls bought it. And both reversals up took place at support, 60-minute moving average, and both were after yesterday's very strong reversal up. So the odds favor the bulls. However, we're in a trading range now, and I do not think 16 tested down low enough. So I think we have to get down toward the bottom. But, one or two big bull bars, and then instead of going down, we'll get up to the high of the day. Probably more, probably more limit order bears, 14 high, and they just got their scalp. Even though we're not getting big bull bars, we're also not getting bear bars. So the bulls are owning a lot of bars, every close at or above the close of the prior bar. That makes bears hesitant to sell, and it increases the chances that you suddenly get a bull breakout. Like over here, series of small bull bodies, and then you get a bull breakout. Series of small bull bars, bull breakout. Series of small bull bars, very strong bull breakout. It's a trend based upon time, not price. The price is not going up very much, but the bulls are owning a lot of bars, so they're in control for a long time. Can you sell at the stop below 22, 2 legs up, 1, pull back 2, low 2, low 1, low 2. This is a fairly tight bull channel, and I think that lowers the probability for stop entry bears here. Limit order bears made money, but I don't know, stop order bears not such a good trade. For the bulls, it's a pullback in a bull trend, a bull bar above the moving average, above the top of a trading range, and a lot of dojis in the past 10 bars. So a lower probability buy, even though always in long. I think you're only buying here if you can put a stop down here. You're buying at the top of a trading range. Always in long, bull eye above the moving average. Good for the bulls, but top of a trading range. And I usually do not take that stop entry buy. I wait either for a breakout or look to buy pullbacks with limit orders. Bulls trying for their breakout, trying to accelerate up from a quiet, weak bull channel into a stronger bull trend. Will we still get down to the 9 low? Well, it becomes less likely if this is a successful breakout. If it reverses, then we have a wedge with 14 and 21. then the bears would have a better chance of coming down here again. There are limit order bears selling 21 high, 1 point higher. But because of the risk of a breakout and a measured move up, I'm not sure that it's worth taking that trade. We're in a pretty tight channel here with only one bear bar in 11 bars. Can you sell the close? The bulls made money with the big bear bar. 2, will the bears make money with a big bull bar? 26. I would not do it. I would wait to see if we get a reversal down. Breakout 26, good for the bulls, but not especially big. Trying to get back to the open of the day. A lot of times when you get a big sell-off early, the market just channels up for the remainder of the day. And that's what the bulls are hoping to do here. It never looks like it'll last, but it happens often enough that you have to be aware of it. And until it's fairly easy for the bears to make money, it's better to be buying pullbacks than selling rallies. You have to assume that on a day that's sideways and a continuation of yesterday's range, the bulls are going to get disappointed by 27. So 27 is probably not going to be another big bull bar. However, we're still always in long, and the bulls have a chance at a measured move up. We have a double top, a neckline. Instead of breaking below the bottom, we're breaking above the top. So potential for a measured move up. Still a possible wedge, but look how tight this channel is. Only a 1 tick pullback. That makes stop order bears not want to sell until we start to go sideways. Decent bars by the bulls, and that makes the bears need a micro double top before they'll get a reversal. Is it a second leg trap, 1 pullback 2, or 1 pullback 2? We're still in the trailing range, and it might be, but it's a strong enough pair of bars, 26, 27, so that the bears probably will need a micro double top. Therefore, probably buyers below 28. Trading range day, so you knew that something disappointing would have to happen, either 27 or 28. For the bears, a swing short, second leg trap. But I would wait for a second entry short or for a series of bear bars before selling. And bulls, if 28 closes on its low, a lot of bulls will not buy the 28 low. They'll wait for a bar or two to see if we get a bull bar. This is the disappointment bar for the buy the closed bulls. Sometimes when you get a disappointment bar like this, you can get out break even pretty quickly. Other times you reverse down sharply, but when that happens, you can usually buy more above a bull bar and get out break even, 10 or 20 bars later. What about shorting below 28 for a second leg trap? I think 26, 27 strong enough so that the bears will probably need a micro double top. So I would wait to see if we continue down rather than sell right below 27. It's a problem bar for the bulls. So a lot of the bulls buy 27 close, they buy more 1 point lower or 2 points lower, and they're trying to get out break even on their trade, which would be somewhere in the middle here, or break even on the 27 buy and a profit on the lower buy. And for the bears, arguably a two-leg trap, one pullback, two, but strong enough 26, 27, especially 5 consecutive bull bars, and not all of that extremely climactic. All of that works against this collapsing here. Not a good entry bar for the bears, not a good high one buy for the bulls. So we'll probably go sideways here for a few bars. What will happen if we get above 29? Well, a lot of the buy the close bulls, 27, are disappointed by 28, 29. They bought more lower, maybe 2 points lower, and they'll probably try to sell around the 27 close where they made their first purchase. So they buy there, they buy more here. Disappointed, they either get out in between their two entries, break even on the trade, or they get out at their first entry, 27 close, break even, and a profit on their lower entry. So probably sellers above 29. Buyers or sellers 30 high. Probably sellers somewhere above 30, but they might be up at the 27 close. Okay, now do we break to the upside? Do the bulls not scalp out, take profits? Or do we get sellers at the 27 high and enter a trading range? I think we're going higher either way, but this is interesting information right here. Are we going to go sideways first and then up, or are we going to go up? With all of the trading range trading, despite this channel, I think we'll probably go sideways before we go up. For the bears, they want some kind of a second entry short, like a double top. But I'm not sure that it's worth selling below 32, because I think more likely we'll get a minor reversal and we'll go sideways. Exactly 4 ticks below 27 close. So some bears sold that close and they needed it to fall 5 ticks. Other bears sold either the 30 high and 1 point higher, or simply 1 point higher. They needed to get 1 tick below the 30 high. And the bulls are aware of both types of bears, and they're trying to stop both from making money. The ones who sold the 27 close have already made money, and the ones who sold the 31 high, 1 point above, made money. Stop order bears, is it enough? Is the probability high enough for the stop order bears to sell below 32 for a double top? I would not, because this channel is very tight. The biggest number of bars that we've pulled back is one bar pullback. A pair of bear bars, but only a 1 bar pullback. So not much selling pressure, and I'd rather be selling with limit orders. I did sell with a limit order 1 tick below the 27 close, and I've scalped out. But anyway, I'd rather be selling with limit orders than with stop orders. And if we go sideways and get some kind of a double bottom or a triangle around the moving average, then I'll look to buy again, either with a stop or with a limit order. Here's the 15-minute chart. Where are the bear bars? 3, 6, 7 bars without a bear bar. We finally have one here, but it's after a pretty good bull breakout. So not a good bet that we're going down. Probably if we go down, it'll be a minor reversal. While we're always in long and we're trending up, this is not very bullish, and probably more sellers than buyers, 27 high. Probably we'll start to enter a trading range soon. We have a gap, 29 low, a little bit of overlap here, but negative gap often leads to a measured move. We have a double top here, so that would be the measured move target around the high of the day. As I said, after a big outside down day like yesterday, especially a day closing in the middle like yesterday, it's unlikely that we're going to get very far above yesterday's high or below yesterday's low. We might get above yesterday's high, but we're probably not going to get far above it. Limit order bears made money, 27 high. Not a good looking stop order sell, 34. But I've said after this buy climax, we might go sideways. Sometimes it goes sideways immediately. Sometimes you get a second leg up and then it goes sideways. If a breakout is extremely strong, you often get a third leg up like yesterday. You got a second leg up and then a third leg up. Today is not extremely strong, so this might be the end of the rally for the next 5 or 10 bars, and we may start to go sideways here. Give up bar, big enough bar to make traders believe that the bulls are giving up, and that means that we'll probably go sideways to down for a couple of legs. Similar to yesterday, we had a give up bar 67, then we had an earlier one here, 10, and then 18. And then this is the bull of the bears giving up. Bulls want double bottom 29 at the moving average, but probably a big enough bear bar so that we'll go sideways for at least a few bars. Less likely we'll sell off and this will be the high. Bulls trying to put as big a tail as possible on 35 because they do not want it to be a give up bar. They don't mind a trading range, but they don't want traders, people looking at the charts to conclude that the bears have won and that we're going to get a couple legs sideways to down. The close of this bar is important. If it closes on its low, then we're probably going to come down into the lower range. If it closes somewhere in the middle, then we may stay sideways in the upper range. A little bit better for the bears than for the bulls, but not particularly bearish. Probably sellers above 36, enough damage so that we'll probably go sideways for a few bars. Not a lot of bulls are going to buy above 36, even if it's a good bull bar. They have a double bottom at the moving average, but that's a big enough bar to make traders think that there'll be a second small leg down a few bars from now. We sold off around here earlier. We tested it again and sold off. We tried to get above it again and sold off. We sold off. We sold off. So there's some resistance in the 28.47 area, even if it's not clear why. Maybe it's around the breakout point yesterday below 18 during the test of this breakout area. I'm not going to buy above 36 no matter what it looks like. 35 did enough damage to the bull case to make me think sideways is more likely. Bulls trying hard to scare the bears and to get the double bottom bull flag, which they have. But 37, big enough bear bar, especially after this, to make me think we're probably going to find sellers above 36 and we're probably going to pull back. I wanted to sell above 36, but I'm not selling above it. with the closing near its high like this. We're in a bull trend. We have a double bottom at the moving average and a very good looking bull bar. If we were in a bear trend and we see a bull bar like that, then I would consider selling. You can see traders sold above a good bull bar here. They sold above a good bull bar here. The bulls could not even get above this bull bar, and they sold above a bull bar here. Here, we're in a bull trend, so fewer traders will sell above the bull bar. We're either in a bull trend, well, we are in a bull trend, and we're in a trading range. But a good-looking bull bar like that, a lot of traders will not take the sell. I'm just checking something. Open of the week is 2809.5. That's 35 points below where we are, so it's unlikely tomorrow's going to close below the open. It might close below the midpoint of the week and put a pretty prominent tail on top. Tomorrow's Friday, so weekly support and resistance are important. Testing down to the breakout point. We have a double top here, neckline here. Instead of getting a bear breakout, we got the bull breakout. And you can also argue it's a wedge top, and we broke above the wedge top, and it's testing that breakout point. You can call it a triangle, 3 pushes down, 29.36. Does not matter that 36 is above 29 and 39. It behaves like a triangle. It's 3 pushes down in a range. We have a lower high here, and we have a double bottom here. Still always in long, and still measured move target above, but not strongly bullish. So not a great buy with a stop above 40 or above 39. Traders, for the most part, are entering with limit orders, scalping, buying below 36, buying below 37, selling above 36. Would I sell above 39? No, because we have a triangle and we're in the bottom half of the triangle and we're always in long and we're above the moving average. Small wedge, 36, 39, but now fairly tight bear channel, and most profitable trading has been with limit orders, so not a very good stop order buy. If 42 has a 4-tick bull body closing on its high and above the moving average, then maybe it would be an okay stop entry buy scalp. But unless it's pretty good like that, it's probably not worth buying with a stop. Bear is getting a breakout. The limit order bulls, 40, were unable to make money. You can see 42 never went above the 40 low, and now the bears are taking control and the bulls are giving up. We've probably seen both the high and low of the day. Do I think we'll get all the way down to the 9 low? Over here, I thought we would. Now I think we probably will not get to the 9 low. It's probably too low, plus it's probably too far below the 60-minute moving average. Surprise bar, so probably at least a small second leg down, similar to 26, 27. Even with the bad follow through, there was still a second leg up. So even if we get bad follow through 44, we'll probably have at least a small second leg down. Bulls want a 2-leg trap, leg 1 pullback, leg 2 to the middle of the trading range, the bottom of the 23 buy climax, just about there. And the bears want at least a small second leg down. Buy the closed bulls 27, disappointed 28, but they were still able to make money. Sell the closed bears 43, probably will be able to avoid a loss. But a lot of the bears do not want to sell 43, they want to sell higher. Some bulls will buy the 43 close, like the 8 close. And I think it's important to notice if they can make money. Will it get 5 ticks above 43? If so, then less bearish. Can you buy above 44? It's like selling below 28. Probably buyers below there, probably sellers above here. Big problem for the bears, right? They don't want the bar to be too big. For the bulls, spike in a parabolic channel, double bottom 25, but not a very good stop entry buy. Are we still always in long? Probably. The bears had bad follow through after 35 and after 41, and they're getting bad follow through here. If they had good follow through, then I would say always in short. But right now this looks like a double bottom 24, a 50% pullback. Low of the day, high of the day, 50% pullback. Not a good looking buy. Limit order bulls made money buying below 41, below 42. Stop order bulls, it's probably better to wait for a micro double bottom or for a strong reversal up. Strong reversal up, unlikely, probably more likely sideways like this. Stop order bulls made money, and that means the bulls are stronger. If only limit order bulls make money, that's a sign that the bears are not all that strong. But if stop order bulls make money, that's a sign that the bulls are pretty strong. "15-minute chart, you can see it's simply a bull flag, a pullback after a strong rally. Can you sell a point above 44, similar to selling above 31? I would not. This 45 looks big enough to make it likely we're going to get at least a second leg up. So spike, parabolic channel, reversal up. I'd rather be buying at the market or buying a pullback than selling for any reason. Bar 45, multiple of 3. So the 15-minute bar is closing soon. And does that look like a sell or a buy? We have a reversal and a pullback, so it's a small cup and handle pattern. Trading range day, so it's not a strong buy, but I certainly would not be selling. For the bears, double top 40, micro double top, but probably buyers here. I think it's a low probability sell. Double top 42, 45, double top 40, 45, probably buyers here below 46. What happens if we break below the double bottom? Do we get down to the next support, 60-minute moving average, 16 low? It's a limit order day. So probably buyers below 44, even though the bulls should have been able to get more than 1 point above 44. So I would not sell in a stop below 43, but I might sell if it's falling quickly. I might sell at the market for a 1 point scalp. The bulls want a pullback from the reversal, and the bears want a double top, break below the neckline and below this double bottom and measure move down. I still think it's slightly more likely that we're going to get a double bottom pullback to a higher low and that we're going to go up. When we get these double bottom pullbacks, I think of them as a type of triangle, because you have double bottom and then a higher low, and usually get a lower high on the way down there. But I also think the market's still always in long. It's possible we can get back up here. I don't know. We have a small double bottom here, neckline. I'm buying below things, below 46, not with stops above things, even though we're above that 15-minute bull reversal bar. Remember, I said at the beginning of the day, yesterday was an expanding triangle, and today so far is a contracting triangle. There used to be a pattern that people used to talk about as a diamond pattern, and that's exactly what it was, an expanding triangle followed by a contracting triangle. And obviously it's a breakout mode pattern. Every triangle is a breakout mode pattern. But it's still coming in a bull trend. And therefore, even though on the 5-minute chart it's pretty neutral, the odds still ultimately favor an upside breakout. So if the bears get a breakout on the 5-minute chart, we could easily fall 10 points, but the pattern would still be bullish because just look to the left on a higher time frame chart, it would simply be a double bottom bull flag. For the bears, low 2, 46, but I think always in long. Some bears, limit order bears, might sell 46 high. I would not. We have 4 decent sized bull bars here. So I'm not willing to sell that high. The reason why we're not going up, bulls are scalping. They're buying below things, and then when it goes up, they scalp. Bulls are hesitant to buy too high above here. They did buy here a little bit, but for the most part, they want to buy pullbacks. Not many sellers 46 high, but possibly sellers 40 high, 37 high, and at the trend line. I still think we're always in long. So it's slightly more bullish than bearish, not very bullish because we're still in a triangle, lower highs, higher lows. Dominant feature was this double bottom up on 7, very strong, and then up again on 9, 10. And the bears could not get below those bars on 12 and 16. A lower high in a triangle, but 3 decent bull bars and always in long. So not a very good stop entry short. Limit order short, sure, sell above bars, but I still think it's better to be buying pullbacks than selling rallies. Decent bear bar, but not high enough probability for a scalp. And for a swing, we're just getting too many decent bull bars. We have 5 good bull bars here, and we're always in long. So rather than sell for a swing, I would wait to see if we break strongly to the downside, or maybe go sideways for 5 or 10 bars and then get a better looking sell setup. Odds are buyers somewhere below, not necessarily 54 low, but maybe 50% pullback, maybe trend line. 50% pullback, 1 point below 54, probably buyers here. Good bar for the bears. What about selling down here on the reversal? Still making higher lows. However, the bulls are failing to get their breakout, so the bears might now try to get the breakout. So I may end up selling this as it's going down or when it pauses. The bulls needed to get a breakout, and instead they got a lower high. So traders, it looks like the bulls are saying, okay, it's not a bull trend, it's a trading range. And because of that, bears are now thinking, okay, it's a trading range, we're near the top. Are we going to hold this time? I don't think so. We held 49, but we should not have come back down again, and we should not have gone below 49. Can you buy the low 43? I would not. This should not have happened. This should not have happened. And therefore it's a surprise. And the odds are it'll have follow through. So now we'll probably get down to the 60-minute moving average. Trading range day, odds are the bulls who bought the 43 low and lower will make money. but big enough surprise. Probably the Bulls will need at least a micro double bottom. Possible second leg trap, 1 pullback 2, but the Bulls will need a micro double bottom. Most traders are selling. We should go back above the 43 low because it's a trading range day. Trading range day, you always expect bulls and bears to be disappointed. Bears have a great bar, but chances are they're going to be disappointed, just like the bulls were disappointed after 27 and 33. What about second leg trap? Bulls, can they buy above 58, betting on the second leg trap? Now we have a micro double bottom. I would need to see a very good bull bar to buy above 58. And for the bears, it's a trading range. They've achieved their goal. They got it down near the bottom, and they bought back their shorts. They'll sell higher, but not many of them are willing to sell at the bottom of the range, right above the 60-minute moving average. Now we're simply waiting to see if 58 closes on its high and has a 4 or 5 tick bull body. If so, the bears will not sell here. They'll wait to sell here. What do the second leg trap bulls do? Do they buy above 58? Is the probability high enough for a scalp? Well, the problem is not the probability, it's the risk. You're risking a lot of points, and to make 1 or 2 points, and I'm not sure the probability is high enough for that. Even without going above 58, 58 having a big bull body closing on its high, reversing up from the 60-minute moving average and a higher low is all enough to make bears not want to sell below 59 or below 58. If this was taking place far below support, then traders would sell below. But with it taking place at support, most traders are not going to sell below 59 after such a good reversal, 58. This is a common situation where you have strong momentum down and a great looking bull bar, but it's big, like buying above 7. So if you take that buy, you got to put a stop way down here, and that means you have to trade small. Similar to selling below 8, you got a big bull bar and you're at support. So I would not take that short. You can take it for a swing. I would not. Higher probability to look for some kind of a double bottom and a reversal up. I don't know that the probability is high enough for a scalp buy above 60. But I think the bears, if they're short, they'll probably get out above 60 or above 58. Difficult location for the bears, the bottom of a trading edge day and just above the 60-minute moving average. the bears want a little too short with a bear bar 61, but bad location, and we're a little bit far from the moving average. So that lowers the probability. Right now, I still think it's more likely that we're going to bounce. Good signal for the bears, right? Except location, far from the moving average and just above the 60-minute moving average. Okay, swing sell, higher probability to wait to see if we break strongly to the downside, which is, I think, still less likely than reversing up. We'll find out soon. Bottom of a trading range day, 60-minute moving average, wedge 43.57, and trading range days always make traders want to buy near the top and sell near the bottom. So as bearish as this looks, it might not be as bearish as it appears. So I'm not selling here. I have not bought yet, but I'm not selling either. Limit order bulls bought the 57 low, 60 low, bought more lower, or they simply bought lower. They needed to get above that 57 low. Otherwise, we'll have a gap and possibly a big sell-off and a measured move down. More likely, we'll get buyers in this general area. Earlier today down here, I said I thought the bulls needed a double bottom, and I was concerned that 16 was not low enough. So this might be that double bottom trying to form down here. We're in the buy zone, bottom of a trading range day. But it would be better if the bulls get a very strong bull reversal bar or some kind of a small double bottom over the next few bars. And for the bears, I think I'm not going to sell down here. I'll wait to see if we break strongly below the low of the day and then sell the market. Not a very good looking buy signal bar. Do the bears get out of shorts above 63? I would. Limit order bulls 57 have not yet made money. Has to get one tick above 57 low. While unlikely, possibly a measured move down. Important support. So either we get reversal or a breakout here. Not a good buy signal bar, but the location is good for the bulls. Double bottom 9. I talked about that earlier in the day, that we might come down and test that 9 low. That the reversal here did not look like a very good reversal, and therefore it was probably a bull leg in a trading range, and the bulls would want to get a double bottom higher low. So bear trend, bull breakout, higher low, major trend reversal, but steep channel down, not strong rally up. The bulls often need to get a double bottom before they can get a reversal up. I don't think this is going to be much of a reversal up, if it is a reversal up. However, the bears should not have allowed it to get this far up from the 9 low. Traders who bought with limit orders, one tick above the 9 low, have made a couple points, which I think is not good for the bear case. We can still get the strong bear breakout, but this is not behaving the way a strong bear breakout typically behaves. It usually does not hesitate at support. Potential for a trading range day to convert into a trend day here. Until the bears get a big, clear breakout closing far below the low of the day, the odds still favor this being a trading range day and the market reversing up. Bears trying. They probably need 65 to be a bear bar and 66 to be a bear bar to convince traders that we've converted into a bear trend instead of a bear leg in a trading range day. Whenever you get a breakout to a new low and a possible bear trend with a lower high, bulls see it as 2 legs down, A, B, C pullback. So they see it as a big high 2 buy. And you have to see what the market does down here to know, will the bulls get the high 2 buy or will the bears get their successful breakout? The bears were trying, but they have not succeeded yet. Bulls not getting a good looking buy signal bar yet, but this is not behaving the way successful bear breakouts usually behave. So it makes me think we're not going to get the bear breakout. I don't know that we'll get a rally, but right now this gap I think is probably going to close. 15-minute bar, a slightly lower low double bottom and a higher low. So bear trend, bull breakout, double bottom, higher low, major trend reversal, but pretty tight bear channel, a lot of bear bars, not a very good buy setup. Because it's not a very good buy setup and the bears are not getting their breakout, this is what we might end up doing, going sideways. The bears pull back from the breakout, micro double top 61, 66, but too many bars with tails below. That lowers the probability for bears selling down here. Bad bar for the bulls, but we keep reversing up at support. So not a lot of bears will sell with a stop below 66. It's similar to bar 8 earlier. They'll wait to see if we break strongly to the downside, and then they'll start selling at the market or on pullbacks. Spike parabolic channel, bigger version of spike parabolic channel here. And you can see here, we did not get a bull trend. And if 67 closes on its high, we probably will not get a bull trend here either, but we might get up to the top of the channel, back to the middle of the day's range. Final seconds, bulls wanted to close on the high of the bar, which it did not. So a lot of bulls will not buy above 67. They'll wait to see if we reverse up strongly and then buy higher. Still always in short, but a lot of tails here. So a lot of bears are flat, waiting to see if we break strongly to the downside. Getting close to yesterday's low. So that's the next target. I'll put this down here. Lots of tails, but bulls unable to create a reversal. And the tails are making me not short, so I'm flat right now. Again, we just keep channeling down with a lot of bear bars. So it makes a significant reversal unlikely, but difficult to hold short because these tails all represent buying, which means we're getting a lot of buying instead of consistent, relentless selling. Also, bulls keep making money buying below bars. Are we always in long? We probably are, but we need to see it close up here. Probably with this tight channel, it's not going to go very far up, but at a minimum, the bulls would like to get to the top of the channel up here, which would be in the middle of the day's range. I would be out of shorts, and most of the bulls are scalping, buying below bars and scalping out. Sell at the moving average, sell at the top of the range. To take profits, to go short, I'm not sure that it's worth going short. The reality is the bears who sell will probably make 1 point, But how much do they have to risk to make that 1 point? Their stop is probably somewhere up here. For the bears, a double top, but a climactic sell-off, a little bit of a spike in a parabolic wedge. The odds favor at least a small second leg up. Despite the double top, 66, probably buyers below 71. Always in long, but very tight bear channel, probably a minor reversal. So we might get to the top of the channel, probably buyers below. The market was simply probing for a bottom. All of these tails, the bulls bought, the bulls bought, the bulls bought, but no follow-through buying. And here, they bought all the way up. Near the end of the hour, bulls they'd like to get a bull body on the bottom of the bar, high or low, triangle, but they're happy simply to get it to close at or around the moving average. If they can get a bull close, then it's a better buy signal bar for a double bottom bull flag. We're probably going to close below the open, and therefore we'll probably get a bear body on the daily chart, and that means that we have a bear IOI, an inside bar following an outside bar, and it's a sell signal. But when a bull channel is as tight as this is, it's a minor signal, which means the trading range is more likely than a reversal. However, if we reverse down sharply tomorrow, if we reverse this, for example, then we might get a couple legs down to the moving average. Bull scalpers, 72 low, just scalped out. They were unwilling to hold. For the bears, I think it's difficult to do anything, unless you're willing to do limit orders at the end of the day. You're selling the bear close 72, selling the 66 high. And, excuse me, I'm not willing to do that. Because this channel was so tight and lasted as long as it did, bulls are only willing to scalp. They're happy that we got a sharp rally up to the moving average, but they were not expecting much more. They expect a second leg sideways to up, but we probably will not have time for that today. When a channel is tight like this and you get a bull breakout, it's still a minor reversal, which means usually a trading range, and that means that you usually test down, at least to the middle of the range or so. The market held the 60-minute moving average yesterday, broke below it a couple of times, held above, broke below it, held above. 60-minute chart, you can see at the 60-minute moving average, the market is reversing up from it, but it needs to resume up. If it spends too much time sitting on it, it starts to become 50-50. That will break to the downside instead of resuming up. Spike and channel. Target usually is the top of the channel, which is pretty much right around the middle of the day's range. And right around yesterday's close. So good reasons to go a little bit higher. Probably will close right around yesterday's close. So I'm probably going up a little, but not much, and probably not going down. So probably sideways around yesterday's close for the rest of the day, even though we're always in long. Target, one target, obviously 58 high, top of the channel, but probably sideways right around where we are. Also in the middle of that 3-day trading range around 2840. Nobody wants to sell because they know we're probably going to close around yesterday's close and the 43 low. And traders are hesitant to buy because they don't think we're going to go much higher. So they don't want to buy at yesterday's close. They want to buy a point or two below yesterday's close and then take profits around yesterday's close. had a lot of little interesting things. Yesterday was an outside day, and that meant that today was probably not going far above yesterday's high, and today was probably not going far below yesterday's low. And in fact, we probably were going to stay within yesterday's range and form an inside day. Yesterday's an outside day, today's an inside day. That created an IOI setup going into tomorrow. The day has a bear body, so that's slightly better for the bears, but tail on the bottom of the day, tail yesterday, very tight bull channel. If we do trade tomorrow below today's low, it's probably a minor reversal. The target would be the bottom of the most recent buy climax, which would be here. Whenever you have an II pattern, which this is not, whenever you have an II pattern, it's usually a triangle on a smaller time frame chart, and whenever you have an IOI, it's usually an expanding triangle on a smaller time frame chart, which this is. 15-minute chart. We had, let me rephrase that. Whenever you get an outside day, you usually have an expanding triangle of some kind. So up, and then down. Different ways to draw it. Up, down, up, down. Up, up, up. In any case, an outside day is a sideways day, and it's usually a trading range on a smaller time frame chart, and therefore the market's in breakout mode, and usually the next day is going to be a trading range day as well. And today we completely stayed within yesterday's range. Past 2 days, the market was oscillating around the 2840 area. We were sideways, we were above it, we were below it, and then back into it. And we opened a little bit above it today. Odds were we would probably get back into it and possibly stay there for the rest of the day or oscillate around it, because yesterday's an outside day. We opened within yesterday's range. We sold off in the open, and therefore we're probably not going above yesterday's high. We're far above yesterday's low, so probably not going below yesterday's low. And today will probably be an inside day. And yesterday's close was around the middle of yesterday's range, and it looks like today's going to close right around yesterday's close. First bar of the day, a doji bar, not a good buy, and there's room to support, so we're probably going down. Second bar of the day, a big bear bar, surprisingly big bear bar, and not quite to the moving average. It's possible that 3 was going to close on its high, and we could get an opening reversal up and then get above yesterday's high. But even if we did, we probably would not get far above yesterday's high. There probably would be sellers up there. And instead, we got a big tail on 3 and then big bear breakout 5, 6. And that made it look like maybe instead of going up to yesterday's high, we might try to get to yesterday's low. But at that point, I still thought the dominant feature was yesterday, 48.49. A strong reversal up with follow through, and whatever started taking place here was probably continuing here. So all of this is probably simply a pause or a pullback from this bull reversal. And additionally, 6, even though 5, 6 consecutive big bear bars always in short, we're right at the 60-minute moving average, which was support repeatedly yesterday, and we're at the bottom of the bar 50 from yesterday, which was the first pullback after the bull reversal. So that is the support area as well. Buying above 7, possible low of the day, and it turned out it was the low for the next 5 hours. However, I thought 5, 6 were strong enough so that we would need at least a micro double bottom before we could go up. We got that with bar 9. Tail on top, a close above midpoint, and location really good. 60-minute moving average. A little bit more than a 50% correction of the rally from yesterday's low to today's high. And today's probably going to be a trading range day. And this looks like a reasonable possible bottom to the day. And we reversed up pretty well. 9, 10, 11. But 11 tail, we're stalling at the moving average. We're stalling at the 8 high. Looks like we're going to go sideways. It's a minor reversal. We have a tight bear channel, even though it's a higher low major trend reversal. Bear trend yesterday, bull breakout, and a higher low. It's a higher low major trend reversal, micro double bottom. This channel is so tight and only one bar pullback here, and a lot of big bear bars. The bulls will probably need a double bottom. It sold off below 14, and 16 was the double bottom, higher low 9. But my concern about 16 was when you get these double bottom, higher low major trend reversals, the second bottom, 16, usually gets down to the first bottom. Sometimes it even goes a little bit below. And this is far above the 9 low. And it made me think that we probably would have to come back and test that 9 low at some point. I did not think it was going to take 5 hours to get there. And at this point, I was not sure that we would get there, but we ultimately got there and got below it. So 16, we have a small higher low, but a doji bar, a tight range, and not a particularly strong buy, but we started to work up. Here we got 5 bars without a bear body. Looks like we're going higher. A bull II above the moving average 23 going higher. 26, 27, strong enough so that the bears will probably need a micro double top, which means that bulls will buy the first pullback. 28 closing on near its low. That's a problem for the bulls. It makes sideways more likely than much up. And 33, a bull breakout, bad follow through 34. The bulls were likely to get a second leg up after 26, 27, and this probably is that second leg up. Reversal down 34, a doji tight channel, probably minor and sideways, and we were sideways for about 20 bars. 36, a double bottom with 29. I thought 35 was due to bulls giving up, and therefore I would not buy above 36, even though it's a good bull bar. I thought we'd have to get a second leg sideways to down. 45, on the other hand, a double bottom with the bottom of the biclimax and a little bit of a spike and a parabolic wedge, a smaller version of this spike and parabolic wedge, and a decent bull bar, probably an okay buy. Tight channel, might need a double bottom, which we got, and not a good buy signal bar, 49. So nothing is looking right. And when none of the signal bars look right, and nothing just looks quite right, the market's usually in a trading range, which means traders will look to buy low, sell high, and scalp. And limit order traders just made money all day, even doing crazy things, buying the 6 low, the 6 close, buying the 8 low, right? Selling 27 close, selling 33 close, and then buying below every low all day long, even buying below 44, buying below 57. We had a gap 66, yet the gap closed. So limit order bulls made money, even though we broke to a new low of the day. We broke below the 60-minute moving average. The odds were it would remain a trading range day, which meant that the odds were the bear breakout attempt below 6 was going to fail. And once traders conclude that the bears were going to fail, we probably would try to reverse back up to the middle of the range, which we did. Most of the reversal was just 2 bars. Decent bull bars. So you got to be thinking, okay, measure move up based upon the height of the bodies. I don't know that we'll get there. We have that big magnet at yesterday's close, so we might not get there. For stop entries today, selling below 4, not great. Buying above 7, if you do, I think you put a stop below 6, and if it goes below 6 and reverses up, you buy again. Selling below 8, you could do it for a swing. It did not work below 8, but it did work below 61. I personally would not do it, selling right above the 60-minute moving average after a strong reversal up, bar 7, and after yesterday's strong reversal up. And that made bar 9 the first reasonable stop entry trade. Below 14, you got a wedge bear flag, 1, 2, 3 at the moving average. And, it's possible to sell off, but I think we're not going to fall below the 9 low. And therefore, if you're selling below 14, you're scalping and you're looking to buy a reversal up. You got the reversal up 16 for stop entry buy, but 2 dojis, a bear body, and the 16 low did not quite reach a logical target. And therefore, it's a lower probability buy. The next higher probability buy was above 23, but you're buying in the top half of what will probably remain a trading range day. So you're probably not going to get much of a swing out of it. I would not sell below 28. Buying above 31, I would not do it. Selling below 34, maybe we got the second leg up. And then buying above 36, I would not. And then buying above 44, probably okay. A spike and parabolic wedge testing 23 low. And then buying above 49, I would not. Selling below 54, a low 2 with 46 might be okay, but we're probably going to find support around the 43 low. We did, but the bulls could not trigger a buy, and we got a low 2 short below 61 and a couple small legs down. Not a good stop entry. Stop entry sell. Not a particularly good stop entry sell 66 or 68, although both ended up being scalps. And not a good stop entry buy 69. And buying above 70, we're probably going up, but it's not a great buy signal bar because it's a minor reversal after a tight bear channel and your stop is far below. And then buy the close, sell the close. The one close was probably sell the close. We're probably going down at least enough for a scalp. And I said on 2 that the bulls were looking for an opening reversal up, and a lot of bulls will buy the 2 close. We're close enough to the moving average so that it's possible that we could be at the low of the day. And then the 6 close, well, you can argue it's sell the close, but we're right at support. And I usually do not take a sell the close entry at support. I tend to look for a reversal. And then through here, is it buy the close 10, 11? I think we're probably always in long, but you need to stop below 6 because we may be in a trading range instead of a bull trend. And then here, 3 bull bars, 23, 24, 25, probably going to get a breakout 26. So buy the close. 27, also buy the close, consecutive bull bar breakout, but the bars are not all that big. And we're near the top of the range, and the day is probably going to be a trading range day. So if you're buying up there, you're probably going to be scaling in lower, and you're disappointed by 28, and you're probably going to look to get out around the 27 close, and that means other bulls will be buying a couple points down from the 27 close and trying to get out there. And then here, not really buy the close, sell the close. 57 was a surprisingly big bar, and therefore probably the bulls giving up, and we're probably going lower, so possibly a spike in what will become a spike in channel bear trend. So reasonable to sell the close, even reasonable to sell the close 58, 59. 62, again, we have that issue. We're right at the 60-minute moving average, right above the low of the day. Probably not going down a lot further. So this is, I think, not good to sell the close. Limit orders, they made money buying at the 1 low, even with 2 being a big bear bar, and they even made money below 4. It took a while, but when 14 went above the 4 low, and it bailed out those bulls even after this big sell-off, and the odds were we were going higher, and everything was limit order trading, buying below 4, buying below 3, selling above 7, buying below 8, even though it's a big bear bar. Even selling above 9, bears made money. Selling the moving average, selling above 7, buying below 11, I thought was reasonably good. 14, not particularly great limit order buy, better to buy near the bottom of the range. Buying below 18, probably okay. Selling above things, 18, I would not do it because I think we're going higher. Maybe selling above 14, not great either, because that's for the bears a good sell setup, a wedge bear flag, and if we go above it, we may go up for a measured move. And then up here, selling above 30 made sense, buying below 28 made sense, maybe selling above 36 made sense, selling above 39, buying below bars 36, 39, and then here buying below 46, maybe selling above 46, selling above 55, and then that big bear bar, we're probably going lower. So I would hold off on buying for at least a few bars. Limit order bulls who did buy 57 gave up on 66. It did not get above the 57 low, reversed down, so a lot of them gave up. But other bulls made money buying below 64, 65, 66, 67, 68. So we're probably not going to get a successful bear breakout. Buyers below 72. And here we are, closing right around yesterday's close. In fact, we closed exactly at yesterday's close, unchanged. I think the market is really fascinating right now. 60-minute chart, incredibly strongly up, and a double bottom bull flag. Daily chart, an IOI, so it's a buy setup, but 2 bear bars, not a good buy. It's a sell setup, tight bull channel, big tails on 2 bars, not a particularly good sell. So we're probably going to start to go sideways. The next catalyst that I see 2. One is Trump's testimony in front of Mueller. Trump says, oh yeah, he really wants to answer Mueller's questions, and he's really eager to testify. And that's a lie. He doesn't want to testify at all, but he wants to say that he wants to testify, and then he'll say, oh, my lawyer said I can't do it. They said it weakens the power of the executive branch. So, that's the next political catalyst coming up. And then we also have the DACA vote. I don't think that's going to be major. And then we got the budget vote on February 8th. I think the market is going to become increasingly volatile. Let me take a look at the VXX ETF. Okay. Still, the stock market's at an all-time high, but the VXX volatility index, an ETF version of the VIX, is holding above the all-time low. And that is a sign that even though the bull trend is going up, something's wrong with it, and that we may start to go sideways. And if we go sideways, then we might start to go down. Daily chart, really strongly up. Unlikely we're going to go down all that far. I keep saying 100 points and 5%. I think that's the goal. I think that's what we will get. We've never gone this many days without a 3% correction, without a 5% correction. We've never gone this many weeks without touching the weekly moving average. Let me put up the weekly. This is the weekly. We got close in August, but did not hit. And we've never gone this many months without a pullback. Every low at and above the low of the prior bar. And while records are meant to be broken, they're usually not broken by much. If you're an old guy and you remember 1968, you did see a record that was broken by a lot. I remember watching on television. I was 16 years old, and Bob Beamon in Mexico City jumped 29.5 inches in the long jump, and the Olympic record was about 26 feet. So he broke the Olympic record by more than 3 feet, and he broke the world record by 2 feet. So that is really unusual. And this is kind of like a Beamon-esque, a Bob Beamon type of record break on the monthly chart, the daily chart, and weekly chart. Will it ever get broken? Of course. Bob Beamon's record got broken by several people several years later. A guy from Cuba broke it. Powell from the United States broke it. He's the current world record holder. And the world's greatest long jumper of all time, Carl Lewis, tied it. So even though we're setting world records as far as streaks on the daily, weekly, and monthly chart, they'll eventually be broken. Not for many years, but they will be broken. And mathematically, it's unlikely that they're going to continue much longer. My one concern is on the monthly chart. This is so crazy. This is so extreme that it increases the chances that the first pullback will be deeper than anyone expects. So for example, if Mueller indicts Trump or something like that, something crazy happens. Instead of a 5% pullback, we could get a 10 or 15% pullback in just over the course of a month or two. But it doesn't matter. Even if it's a 20% pullback, traders are going to buy it. When a trend looks like this, I don't care how big the reversal down is, traders are going to buy it. So not much downside risk over the next many months. It's possible we can get a very quick sell-off that's 10 to 15%, maybe even 20%. I doubt it. I think the sell-off will be about 5%. But even if it is worst case 20%, traders will buy it like crazy because they're so eager to buy for any reason. If they finally get a chance to buy at a discount, they'll buy. Let me take a look at questions. Okay, in trading ranges, sometimes traders enter the close of bars, for example, bar 12 here. One tick beyond the close of bars, like bar 28. Okay, at that low, yeah. And one tick beyond the tail on bars 9, right below that low, 14. These are the examples he's citing, and 40 over here. And one tick above the tail of bars, like on bar 44. Okay, how can you know where to place your limit order? My general rule in trading ranges is that everything is, I gotta be careful with my wording. Everything is unclear, and all I know is I want to buy low. I try to figure out where a reasonable stop is, usually a ballpark of some measured move. So, for example, if I'm looking to sell up here, I'll have a mental measured move stop somewhere up here. And so the stop is big, and that means I have to trade small. If I'm looking to buy somewhere below things down here, I'll want a measured move stop somewhere below a measured move to allow for further down. That means you have to trade small. And the same with over here. If you're looking to buy for any reason, let's say buy above this bar, you want a stop at least beyond some kind of a measured move, because bottoms often don't work, and you usually have to get a second or third entry before the market eventually goes your way. So that makes trading ranges difficult for limit order traders. I think most traders, if they're starting out, should not be using limit orders for anything, especially selling at the top of a range or buying at the bottom of a range, because a lot of times they will not have a good sense of when a breakout might be successful, and they'll end up selling at the top of a range when the market is probably breaking out successfully, and they'll probably be buying at the bottom of a range when it's turning into a bear trend. So it's better to, let me put a bar chart instead of a, okay. It's usually better to take second entry, stop entry sells 1, 2, and second entry, stop entry buys 1, 2, or 3 near the bottom. You buy second entry stop order reversals near the bottom, and you sell second entry stop orders near the top. That's usually a safer way to do it. So it's not like I or anyone else buying with limit orders at the bottom of things feels really confident that we're picking the exact low. I'm never confident in a trading range that I'm picking the exact low. I am confident that the market's in a buy zone or that it's in a sell zone. You sometimes hear me use those phrases. Like all through here, I said buy zone, so I'm looking to buy. And I did buy. I bought a few times. But I did not buy with stops. I was buying with limit orders, or as soon as the market's trying to reverse up, I'll buy. Okay, did you come up with the term measured move, or was that a word used in technical analysis prior to your books? Asking because I see a lot of people using that term now. Yeah, measured move is an old term. A lot of the terms that I use, I did come up with because a lot of times there are all these stupid terms that people use, and to me they're really. I want terms that when you hear the word, you can make some sense of it. It has some relationship. Instead of a rhino horn pattern, I'll say a failed breakout or a final flag reversal. So there are all these, terms that people use that, really are not, they're not accurate. But measured move has been around forever. I tend to see measured moves. I use much broader definitions for everything, and I see measured moves that you'll never see in any place else unless they're copying my stuff. So you can see in the room the way I talk about measured moves and gaps, and I'm the only person I don't read much of what anybody else writes now, but gaps, measured moves, a whole bunch of stuff like that, a bunch of the price action stuff, the size of breakouts and spikes and trend bars and doji bars, that is all my stuff. I didn't come up with the term doji bar, but the way I use it is different from how other people use it. So, but no, I don't take credit for any of the terms. I just am trying to come up with a way of explaining how I trade, and trying to help people be able to do the same thing. And I don't care if other people use my terms or other people use my ideas. I don't care. My goal is for me to trade well and make money, and to show other people what I'm doing. Okay, question. Do you consider, question about yesterday. Do you consider yesterday's 58 low, 73 low, and 80 low to be a ledge? It is. You get 3 bars at the same price. Even though this is not the low of the swing, it's the low of a big bull trend bar. But I think it's a less important ledge. You can call it a triangle, bottom of a trading range. I think it's a less important ledge than something like this, where you have 3 bars right side by side, or if you have 4 or 5 or 6 or 7 bars at the same price. The more bars and the closer they are in time, I think the more important they are. Question: Can you briefly discuss what you look for a limit order scalp, and also discuss the stop order for a loss order on the scalps? In general, I don't even know what my default stop is on my scalps. On some of many different brokerage accounts, but on the accounts that I trade a scalp with, I have default. As soon as I place my order, buy with a limit order, for example, it automatically creates a stop order, and it's about 5 points down, and it automatically creates a profit-taking limit order about 5 points off. To be honest, I don't know if it's 4 points or 6 points. I don't care. It's just far enough up and far enough down so that I don't worry about them getting hit instantly. And then once I'm in the trade, I quickly adjust them. And when I'm buying with a limit order or selling with a limit order, like I said, I typically use a fairly wide stop. If the market's in a fairly tight range, I might use a 2 or 3 point stop. For example, I sold the 27 close over here for a scalp. I knew that if it goes 6 ticks above 27, then bulls buying on a stop above 27 made money, and I'm clearly wrong. So for me, I put a stop 6 ticks above 27. And different situations are different. If I'm buying at a prior low, for example, if I buy the 12 low, right, I'm going to put a stop below 9 because I know it should not go below 9 if this is a bull trend. So in that case, I have a fairly tight stop for a limit order. And other times I have to use a wider stop. If I bought the 4 low, which I did not and would not, I would have to use a very wide stop. If I sold the 1 close, I'd probably put a stop 4 or 5 or 6 ticks above 1. Question: when you buy at the 8 low for a scalp, where's your stop? And can you explain why? I don't know if I bought the 8 low. I think I bought the 8 low. Either that or I bought as soon as it started to reverse up. I put my stop below 6, and I knew that I could get stopped out. And if I got stopped out, I was going to quickly buy again on a reversal up. For me, it was a low risk trade, which always means low probability. But I thought it made good sense. I thought the market was going to try to hold at the 60-minute moving average, because the 60-minute chart is extremely bullish, and therefore the moving average is probably going to be support. And I thought we were trying to get an opening reversal up, and I thought this was the dominant feature on the chart, yesterday's reversal. And if I'm right that this is the dominant feature and this is simply a pullback and a higher low major trend reversal, the bears are going to have a hard time making money selling too low, and the bulls will probably buy below. So, I bought, I don't remember what I bought it somewhere down here, and I put a stop below 6. If I got stopped out, I would have bought again on a reversal up. Okay, hope everybody has a good night. I think we'll have some interesting time coming up, because this is just so extremely climactic on all of the higher time frames. Okay, have a good night.